Hello, everyone, and welcome to another edition of the Smart Investor Market Update, where smart investors get their up to date price analysis and market information. Okay, before we get started, let me just say we have a few announcements. What we're going to do is and this has been because of feedback from folks also who have been following the show, who have been enjoying the videos, etc. And what I'm going to implement is that we're going to be having certain days where are theme days. So, for example, on Mondays we may look at commodities or dig a bit deeper in the commodities market. Tuesdays we may look at currencies. Wednesdays we may look at different stock sectors. Thursday we may look at individual stocks that are really performing well, growth stocks that are surging. And Friday we may look at the broader market and just where the profitable opportunities are. I haven't really worked out the exact days and what the themes will be. We could have an ETF day, uh, and just various different ideas floating around. So if you have an idea, what you can do is send an email to info@smartinvestorcentral.com, and I will take it into account and then decide exactly how we're going to do it. I like the idea of a commodities day, a ETF day, uh, and a currency day, and a sector day where we just look at the various different stock sectors, because there are a lot of things to cover in the market, and it's difficult to do it all in one show. Okay, so we'll be taking your suggestions for that. Again, info@smartinvestorcentral.com. It's the month of October. We survived September pretty much unscathed. There are a lot of folks thinking that September would have been a month of declines, and we actually saw, if we take a look at the monthly chart of the S&P 500, we saw the market actually rise here in September, which is it marked the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10th, 11th month of gains. Well, we can consider August was a doji and it was much unchanged. Similar situation to March, but we haven't had a down month in S&P 500 since October of 2016. So we're just seeing gains and gains and gains. And the market momentum is still up. The volatility index is fairly low. It seems that everything is hunky dory and everything is good. But while I remain, well, the price action remains up. So I will be more looking on or have an upward bias. We have to keep in mind and we have to get our stop losses in, because when we see the market just going up like this, we could be in a situation where just around the corner the market turns around. So just be cognizant of that reality and be cognizant that that could occur. It doesn't make sense as investors. You get caught flat-footed and don't know how to react if the market really starts to turn around, and watch all your profits evaporate. That definitely wouldn't be good. As of this recording, the Dow is up 126 points. The S&P 500 is up 7. The Nasdaq is up 7 as well. In terms of percentages, the Dow 0.57%, the S&P 500 0.28%, and the Nasdaq 0.12%. That is what the major indices are doing at this point in time. Now, looking at the European market, where we see the German DAX, and we see a surge in DAX here. As you can see, the market is coming up on the all-time high that was made. This was actually made this year. All-time high in the German DAX, up at that just shy of the 13,000 level. So the market is going up to test that region, as you can see here with the German DAX. Taking a look at the the FTSE in London, we see the market. This is underperforming the other major indices, the S&P 500 and the German DAX, but still we're still close to the all-time high that was made in this near that 7600 level. So European markets are looking fairly good. Taking a look at the US dollar, we see that the dollar bounced off of support last week, and we see the dollar, this was this all important line of support, and we see the market is bouncing out of that level as we speak. So that is very or fairly positive for the US dollar, and we just want to see if the market reacts again to the downside, or we continue to see a further rise in the value of the dollar. Crude oil last week was surging, and we see that the market is coming right back down into its consolidation area. This triangle that I drew marks the area of consolidation in crude oil, and until the market breaks out of this malaise, nothing really much happening here. Until it breaks either to the upside or to the downside, we will continue to see choppy price action in the crude oil market. Taking a look at the gold market, gold is down again this week. It was down last week, and in my opinion, this represents a good opportunity for a buy. Once I see a bounce here in gold, because we normally have the move upwards, a pullback, the move upward, a pullback, up, pullback. So I believe this is just a pullback in a broader uptrend. Naturally, this can change if the prices really react to the downside, but I don't see any evidence of that at this point in time. And we're actually coming up into some important areas of support in that 1,276 region down to 1240, 1220. Those are the support points in gold, and I'm looking for the market to bounce out of those levels. And this is very important for all some other commodities. For example, silver. I believe silver is taking its marching orders from what gold is doing. And as you can see, silver is also down. It was down last week. Just clean up the chart a little bit. It was down last week, and I'm looking for a bounce also in the silver market to see what's happening. So taking a look at the broader commodity index, and we see commodities just after a pretty choppy week last week. We see the market inching to the downside, and we can see a move to the downside along with gold, along with the crude oil market. Now the question with the commodity in this index is, this is a pullback in a broader uptrend, or will we see another break to the downside? And we just have to wait and see. Bear in mind, commodities are at a long-term low. The last time markets were the prices were this high, was this low, generally was in around the 98 region, where we saw the commodity index surge from 98 all the way up to 2008. The market collapsed to the downside, found support near this 98 region, and is in a consolidation. And we could see a break to the upside in commodities, or we could see the market retest the low, the 98 low. And let me just draw a line on this 1998 low. Okay, that's a low in 98. We could see a scenario where the market really takes off to the upside, because commodities are relatively cheap at this point in time. Look at this. This index goes all the way back to 92, and this is some low prices, and that's why we're seeing a lot of analysts say that commodities are in a bottoming process, and the opportunities in various commodities will be extraordinary over the next couple of years. uh, and we see that in the setup we see in gold market pulling back. We see the crude oil is relatively low, and it's just a matter of taking advantage of the boom that I anticipate in commodities. How do you take advantage of commodities? You can do it with ETFs, you can do it with futures, you can do it with commodity funds. There are a number of vehicles that you can use to maximize your gains from the commodity market that I anticipate over the next couple of years is going to be huge. Similar situation where the S&P 500 bottomed in 2009. Uh, let's just take a look at the S&P 500 market. The market bottomed here in 2009 and then surged over 300%. I believe we are at a similar situation where with the commodity index where the market is bottoming out and we could see a surge from 80 to even take out this high that was made in 2008. So 80, 160. We could see the market really go up to 240 and 200%, 300% move will take it above that 240 level. So that's what I'm seeing for commodities over that long-term period. Again, we'll be speaking more about commodities in the theme show where we'll look at the different commodity markets and the breakdown in certain commodities. And it's the whole point is to give you, the investor, more information, more markets for profits, because there are folks that are just in stocks alone. But when stocks turn around or stocks aren't doing that well, there are always other markets that you can take advantage of. And as I said, you can use ETFs that are tied to some of these commodities to capture the gains. Okay, thank you very much for listening. And I'm Beyond Dale, and I hope you have a wonderful day.